Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level. So in my last video I did mention that market has taken support at a crucial level, and from this particular level can go anywhere. So let me show you what particular trade we have taken, why we taken that particular trade, and what was the result. So just let me just open my WhatsApp broadcast. So as you can see on 9:51 I said that we should go long in Nifty with a stop loss of 10 335. So to uh, for that, we have what we have done is we have sold in Nifty uh, 30 350 put option. So when you sell a put option, you are expecting a stable to bullish move. So our expectation was that the market should stay above 10,362 to see this up move. So if the market would have stayed above 10,362, it would have definitely would have seen much a great amount of move on a upside, but it did not happen that way. But we did not lose out much on this particular trade, and we did cover our trades at a very minimal loss. Apart from that, we were also long on a bank Nifty 25,000 call option, which we purchased at around 1 rupees 25 paisa. The reason was also that because the kind of pattern that has emerged in the Nifty and Bank Nifty stock, the move could have been huge if at all that would have happened. So there was a minimal risk, so that was a zero hero call, as I say. So that was the particular risk. So both the calls were not able to generate any sort of profit. However, we were able to cover it with a minimal amount of loss. So what you should do always is try and make money when there are good chances that you will be end up making a good amount of money with a minimal amount of loss which you have to take, be it is a business or anything like that. So there was a risk, where we took that risk, but unfortunately it did not materialize the way we would have expected. However, by taking that particular risk, we were exposed to a good amount of up move, and if that would have happened, we would have definitely got a good profit. So the risk was all in all justified. So there was a minimal risk and a huge up move, and the expectation was kind of that. Apart from that, at the end of the market, we also take a two trade for the tomorrow. So one was I personally purchased VDL November 345 call option at around 450 paisa a lot. And apart from that, we also purchased Bank Nifty next series 25,700 call option. So uh, I'll explain to you in a bit why we purchased a Bank Nifty call option, even though we did lose a 1 rupees 2 paisa a lot in this particular trade. So let me just get back to the charts and explain to you why we did particular trade and what was the reason for that. So as you can see, there was a bearish crossover in the market, but the pattern was not exactly the same as it is being appearing right now. There was some sort of suggestion that the red line was sticking on the upside whenever the market was trading on a higher side. So what we did was, when the Nifty spot was trading above this red line, we took a risk and we were expecting that the market should go higher once it breaks the white line. So 10,000, let me show, 10,383 was a resistance for the market, and if that particular threshold would have broken, we could have seen a good amount of move. So that happens. If you want to backtest, you can definitely do that. However, what happened instead, that the market did go below the 13 days exponential moving average, and at that particular time we did cover our position. So if we would have not done that, we could have end up covering our position at 21 days exponential moving average, because once the market breaks its 13 days exponential moving average, the next logical support comes to 21 days exponential moving average. But since the most important thing why we covered our position was negative divergence that has been forming on the daily chart, and now it is also gripping on the weekly chart. So that was also the reason we did cover our position at early. So there was a not much amount of low, 8 to 9 rupees a loss on a particular on each lot. So I personally don't trade aggressively, so I was long on a one lot only, and my subscribers was also hopefully trading with one lot. Now let me share you one of the most important thing, and if you follow this particular suggestion that I'm going to give you, you will not end up making a huge losses, though you will not make a good amount of money if you do that, or because the opportunities will be limited if you do so. So let me share you my secret, that what I do to manage the risk. So uh, in stock market, how you manage your risk is the most important thing. How you take a particular trade is not important. How you make a money, how much money you make, how much percentage return you make, it's not important. But for that particular move, how much risk you have taken, so that is the most important thing. So whenever you sell call option, you are expecting a stable to bearish kind of move. So when market goes down, it goes down significantly, but when the market goes up, it goes up very slowly. So you will not be observing a good amount of significant amount of up move in a very in many times. So what I am trying to say, when the market goes down, it goes down very quickly, very drastically. But when market stays up or goes up, it did not go that fast as it does while going down. So what I am trying to suggest is, when since we have sold a put option, we were expecting a stable to bullish kind of move. So if the market starts going down, and if since there was a bearish divergence is there on Nifty chart, so if the market starts going down, it will go down very rapidly. So uh, what I have done is, I have covered my position at a very early stage, because I was expecting some sort of bounce back, but we did not take a risk. So what I am trying to say, if you are selling option for a bullish side, don't take much risk, because if the market goes down, it will go down significantly, and you will end up losing your money very fast. Apart from that, if you are expecting a stable to bullish kind of move, whenever you are taking a stable to bullish move and market goes against you, you go and cover your position as fast as possible if your particular levels gets taken out. Apart from that, if you have taken a stable to bearish kind of move and market tries to come up, it does not matter that much unless and until your threshold does not get broken. So that was the analogy that I wanted to just suggest to you guys. There was also, you can also treat it like that. Whenever you want to buy something, you buy it very slowly, but whenever you want to sell something, you sell it quite rapidly. So that was the human psychology that also plays in the stock market scenario. So since we were expecting a stable to bullish kind of market and market was going down, we did not take a risk. That was the ultimate thing I wanted to convey. Now let me share what the option chart data is suggesting, and what kind of particular move we are going to see in the next days to come. So as far as option chart data is concerned, I can see 10,200 to 10,800 is the option activity range, 500 points on a higher side and 100 points on the downside. If you see the option chart data, there is no not much significant amount of position that has formed today. But whatever the position has got formed, the bullish tone is getting suggested by the position that has been made, but the market participants are not expecting a good sort of up move, and they are expecting a market with a stable to bullish kind of move with and they are clearly not expecting a market to go above 10,800. So that is what the option chart is suggesting. So 10,800, the reason I'm suggesting that, because all the strike prices below 10,800 has witnessed a stable to bullish kind of formation, but the 10,800 the strike price has seen a call writing. So from then only I can see that the market participants are not very sure. So 10,800 is the maximum upside what the market participants are expecting. So it is not that market will go up by 10,800 points, but we are getting the kind of feel that what market participants are trying to suggest by the position that they have formed. Apart from that, what I can see is the put writing has happened on a put side, so it is also suggesting a stable to bullish kind of scenario. But the option chart, again, the change in open interest is not that much aggressive, and that is the only reason we have not made any particular position in the Nifty side. Further, if you see, the CCI is also now trying to come up. Market has taken a support at its 21 days exponential moving average. You can also see a slight amount of rejection of prices at a high level, and you can sort of feel that 10,300 is a good support for the market, because it tested it twice, and now and all the time it has traded and finally came up to that particular level. Apart from that, the technical indicators are also not suggesting that much bearishness as far as the Nifty is concerned, but there is a concern for the market if the MACD goes down below the zero line. Since it has already broken its 55 days exponential moving average, any drag below the zero line can take market to 10,200 kind of level. So that is a very rare kind of scenario, but since it is a possibility, I am trying to just convey it to you guys. So That was my analysis for the Nifty. Now let's check out what the Bank Nifty is suggesting. And since we have made a particular position in a Bank Nifty, so I'll also need to explain to you why we made this particular strategy in Bank Nifty, and what kind of move we are expecting. So if you just see the data here, you can see that the market has taken support at its 13 days exponential moving average. Market now sort of trading in a range, so let me just expand the chart and show you. So 25,367, rather let me show you 25,384 to uh, 25,167 is a broad range in which the Nifty is most likely to trade. But what we can see is a slight bit of tilt of 8 days exponential moving average supporting the spot prices, and since the prices has also opened or closed below the 8 days exponential moving average, that is also bullish for the market. Now if you observe the MACD and compare it with the Nifty, you can see that the MACD has not gone that much down, so it is trading at near about the same surface at which the 55 days exponential moving average is placed. And you can see that there is a slight amount of cover towards upside, so that is suggesting a bullish undertone. So that's the only reason we are also considering this bullish move for the bank for the MACD as well. Historical volatility is not going down. It has been stalling around in its 55 days exponential moving average, but it breaks if it goes below here. Reducing volatility goes good with the bullish move that we are expecting for the market. Now if you observe the RSI went below the 55 days exponential 9, and it took a sharp turn above, and now it is trying to break its 55 days exponential moving average. So if it remains successful in breaking this particular 55 days exponential moving average, you can see a good amount of up move on a higher side. Now let us talk about the target that could be possible for the Nifty. The first target and resistance would be 25,430 would be a very strong resistance for the market. Rather 25,430 will be a very strong resistance for the market. But if the Bank Nifty is able to mount that particular level, the next logical target comes to 25,525. And if this particular level also gets mounted, you can expect a final target of 25,580. So that was the level I am expecting. On a downside, 25,139, which is 13 days exponential moving average, will act as a good amount of support for the market. Now since the market is also trading above its 8 days exponential moving average, it will also act as a support for the market. On the other hand, the white line, which is 8 days simple moving average, it will also act as a resistance for the market. But what you need to monitor is MACD should not go below that particular yellow line, and especially not into the zero zone. Now let us talk about what the option chart data is suggesting. So as I can see for the Bank Nifty, now we are looking at the fresh series now that has started, that will start from tomorrow. So what I can see, a good amount of rollover on a bullish side, and market participants are expecting a move till 25,700. Apart from that, on from above that level, I can see that the call writing has happened. So market participants are expecting a maximum up move till 25,700. Now we need to observe the option chart data. If the 25,800 strike price adds a fresh bullish position on the next day, the bullish move will get strength to that extent. Now if you see the put data, we can see a good amount of put writing has happened, so that is also suggesting that the market participants are expecting a stable to bullish kind of move. And 25,600 strike price has seen a sentimentally high amount of position getting formed. So put writing and fresh bullish position is the more likely than a reasonable outcome for the market to trade in a stable to bullish kind of fashion. Apart from that, we have also considered the various technical indicators, and we have also seen that they are also suggesting a bullish undertone for the market. So that is the only reason we have purchased and taken a risk of purchasing 25,700 is the strike price at which the market participants are observing the Bank Nifty to trade. So since the higher you go, the cheaper will be the premium. So that's the only reason we have purchased 25,000 call option. We are already making 4 or 5 rupees on this particular trade from the time we purchased. We purchased it around a very 15 minutes or so before the close. Apart from that, we have also purchased a VDL. For VDL, I will share it the detailed rationale with my WhatsApp subscriber. If you want to join me, you can message me on 9574399901. The rest of the things I have already explained to you. We are not considering a particular strategy. We are having a whole system wherein we consider the Fibonacci, the candlestick pattern, which conveys the market participant psychology, CCI, which helps us to understand the broad ranges in which market is likely to trade, MACD is the all-time favorite indicator. Apart from that, we are also using historical volatility to gauge what the volatility is suggesting, since we are having a bias that the how the volatility behaves in a particular fashion and which move will be benefited if the volatility moves in particular direction. So that is also reason. Apart from that, we are using a 55 days exponential moving average, which no other trader uses on MACD, historical volatility, and RSI and CCI as well. So we have a whole system, and apart from that, to calibrate our trade, to make to see that the whether we are going right or wrong, we are also monitoring the option chart data. So call and put data conveys a lot of meaning if you are able to analyze them very correctly. So that is also being taken care of. So if you want to join me, please message me on 9574399901. And that's it for the today's video. If you have liked my video, if you have learned something new, and if you want me to make more of such video, please help me to spread my channel, share it to your friends and family. Please hit the like button, subscribe to my channel, press the bell icon if you do not want to miss any of my update. And in case if you have any doubt, you can always mention it in the comment section of the video. Thank you.